Hi friends, welcome back to Quant Street's daily market review. This is the market update for the session ending on May 13th actually, and let's start looking at how the market performed today. So this is a summary page from Vanguard. The Dow Jones up 1.29%, Nasdaq not as much at 0.72%, and S&P 500 up at 1.22%. The 2021 gain for S&P is 45%, 48% for Nasdaq, and 46% for Dow Jones. On NYSE, about 2,200 stocks advanced and about 1,000 declined. And in terms of sector performance, financials, utilities, basic materials seem to have led the rise, whereas technology did well too, but given the size of the technology stocks and their weight in the overall market, in this much has a bigger impact than say financials or basic materials. Let's take a look at the economic calendar. And on Thursday, May 13th, so the market was focused on jobless claims and the producer price index. So the jobless claims were better than expected at 473,000, going down from prior 498,000, and the PPI, the producer price index, month on month was up 1%, actual 0.6%, consensus 0.3%, actual 0.6%. So going along with the yesterday's inflation theory, although it seems that market has bought in the Fed's argument that it's going to be a transitory inflation, the nature of inflation would be transitory. On a year-on-year basis, prior PPI was 4.2 and expected was 5.9. It landed at 6.2, so more than expected rise in inflation and producer prices seems to favor the cyclical stocks as well, as we've seen in the sector gains for today. Let's take a look at Friday's events. So the important disclosures would be on retail sales, industrial production. These could as well turn up the heat on inflation expectations, and consensus for retail sales is going to be up 1%. We also have import-export prices going up by 0.6% as expected, and the industrial production is expected to rise by 1.2%. Prior was 1.4%. Let's take a look at the Morningstar homepage, which shows this grid of value versus growth in small versus mid versus large cap, and you can see that value small cap and core small cap rising almost 2%, growth not so exciting return for large or mid cap, but a small cap doing pretty well in the value factor. On briefing.com, as I said, the PPI increased 0.6% month over month. Briefing's consensus was 0.3%, and the left the year-on-year increase was 6.2%. So as they're saying that month-over-month increase is not a function of low base effects. That's assuming that the producer prices dropped sharply about last year around this time. And it also says that over the last 6 months, the low base effects were not the same convenient excuse. The PPI final demand has increased at an annualized rate of 7.4%. So more current price pressures for producers that threaten profit margin expansion if they are not passed along to the consumers. And yeah, so that's the story from briefing. Let's take a look at what they're talking about the market overall at about 10:34, when we saw that about 11 sectors were higher, and even the growth stocks were doing well. And this is a sharp rebound from yesterday's losses, which in turn were laid on top of sharp losses from previous sessions. So yeah, it's a rebound after 3 days, continuous days of declines. The Apple stock moved back above its 200-day moving average, and let's quickly take a look at how the market behaved over the day in terms of the movement over the day. So the market seemed to have declined and then risen. So you can see a sharp rise in the initial part of the session, the initial hour, especially for Russell, and then a consistent decline and then a rise back. So Russell rising about 1%, SPX 0.5%, gold rising 0.5%, TLT negative 0.1, almost flat, and Nasdaq it's showing minus 0.49. So it was a bad day for oil and also for energy stocks, but there is some good news about energy that I'll be talking about later in this broadcast. The 10-year declined as well, going back to 6.56 from yesterday's 1.69. It was at 1.69 and went back to 1.65. It's not been a great day for cryptos, as announcement from Tesla yesterday and today's announcement of Elon Musk supporting Dogecoin and working with their technology leads to make it more efficient, didn't serve Bitcoin that well, and Ethereum as well declined. Tesla was down 5%, and VIX down also about 5%. Let's take a look at RBC's daily update. So the update about the jobless claims at 473,000, and It says that businesses have been aiming to fill up positions as vaccinations pick up and demand strengthens. As restrictions continue to be lifted, hiring is expected to continue to accelerate. Producer price index rose by more than forecasts following CPI numbers that also posted large increases. Supply bottlenecks and material shortages contributed to the jump. Consumer comfort weakened from previous week, falling from 55 to 54.4. Still, the index has been mostly trending upward year to date, and you can see since Jan 21 the index, which was about 45, has gone up to 54. In the worst days of the pandemic in May 20, it was down to 34.7. A quick look at the sector performance today. So except energy, everything gained. Industrials, utilities, and financials among the top performers. Let's take a look at subsectors. So prominent among these are disk drives. Commodities were down. Broker dealers, banks up more than 2%. Paper about 3%. Let's look at the commodities. So gold was slightly up, silver as well, palladium, so metals doing relatively well, and energy commodities, crude oil, gasoline, all down significantly at about 3%. And so among the other commodities, sugar flat, wheat down, and coffee up 5%. So was corn. Let's move on to Schwab's report, which talks about energy's overperformance, and as you can see, they've changed their rating for energy to outperform from macro value, fundamental, as well as relative strength perspective. So right now they are promoting three sectors: energy, financials, and healthcare as outperform. Utilities and consumer staples are at underperform. And the primary reason, they say, is the rise in oil prices and the relative opening up, especially in the Western and developed nations. The demand for oil is expected to rise, and the oil companies and energy companies have improved their fundamentals. And from both macro and microeconomic perspective, the companies are expected to do well. The PMI, they say, is expected to remain at elevated levels, and the valuations of these companies in energy sector are attractive. So the standard deviation is at about 0.5 or half for energy. The only risk could be that COVID-19 variants could lead to a return to stay-at-home restrictions, which will hurt the oil demand, and also a decline in OPEC supply agreements could increase oil supply and lower prices, which would not be great for the companies in this sector. So yeah, finally taking a look at my dashboard for a month to month picture, and you can see over the last 30 days Bitcoin has turned negative and Ethereum has broken off from tracking Bitcoin, and it's at 50% gain. The major indices are negative, although SPY has improved a bit and come back to about zero or flat return over the last 30 days. In terms of sectors, the basic materials, the financials, and the energy are positive at more than 5%. And commodities, copper and metals index are doing well, and of late I would say gold I think this is gold, so gold is also at about 5%, silver at about 6% return over the last 3 months. TLT down 1.6%, and among the FANG stocks, about flat returns for both Facebook and Google, and rest of the stocks are negative. So that concludes my update for today's market action. Thank you again for tuning in, and I appreciate your time and look forward to sharing more insights in the next video. Quant Street is signing off. The preceding content is informational only and is based on information available when created. It's not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and may not be suitable to you. Thank you.